Welcome to Furniture Industry News. Today is Friday, January 31st, 2025, and we've got a lot to cover in the world of furniture, retail, and manufacturing. Let's dive into the latest developments shaping our industry. President Trump has announced that tariffs on products from Mexico and Canada will be implemented this weekend, a move aimed at addressing trade imbalances and protecting domestic industries. While this decision is expected to benefit certain American manufacturers, it also raises concerns about increased costs for imported materials, which could have a ripple effect on furniture pricing and supply chains. Retailers and manufacturers who rely on materials and components from these countries will need to assess how this might impact production costs and overall pricing strategies. Alongside this, the administration is also taking steps to address high home prices. A newly signed executive order aims to reduce regulations that contribute to expensive housing markets, with the goal of making homeownership more affordable. If successful, this could lead to an increase in home buyers, which would be good news for the furniture industry. More people moving into new homes often translates to more demand for home furnishings. However, with mortgage rates still elevated and the housing market moving at a slower pace than in previous years, it remains to be seen how much of an immediate impact this order will have. Despite concerns in the housing market, exhibitors at the January Las Vegas market reported strong attendance and buyer engagement. The energy at the show was high, and many vendors walked away with optimistic expectations for the year ahead. New product introductions, mixed with strategic merchandising from major brands, seemed to capture attention. This positive momentum is a welcome sign, especially as retailers and manufacturers work to fine-tune their inventory strategies amid shifting consumer preferences. At the same time, however, the pace of home sales has slowed as we enter 2025. Higher interest rates and elevated home prices continue to impact affordability, causing some buyers to delay their purchases. This could lead to softer demand for big-ticket home furnishings in certain markets. For retailers, this means keeping a close eye on inventory and adjusting marketing strategies to ensure they're reaching customers who are still in the market for home updates, even if they're not buying new homes. While economic uncertainties persist, a key takeaway from the recent Furniture Marketing Group conference was the importance of embracing innovation and maintaining clear, confident communication. Speakers stressed that success in the industry now requires a mix of adaptability and strategic messaging. As consumer shopping habits continue to evolve, retailers who can clearly communicate their value proposition, whether through digital channels, in-store experiences, or personalized service, are more likely to thrive. Speaking of retail shifts, Gordon Brothers has announced that more Big Lots store leases are becoming available, which could present opportunities for furniture retailers looking to expand their physical presence. With commercial real estate in flux, these locations might provide an affordable way for companies to enter new markets or strengthen their foothold in existing ones. On the manufacturing side, Ethan Allen has reported a 6% decline in sales, but the company is doubling down on its North American manufacturing strategy as a competitive advantage. By keeping production closer to home, Ethan Allen aims to maintain better quality control and quicker response times to market demands. This move highlights a broader industry trend of companies reconsidering their supply chain strategies in light of global uncertainties. Meanwhile, Bassett Furniture is seeing a different trend, as the company returned to profitability in Q4 and exceeded expectations. This turnaround reflects the value of strong financial discipline and strategic cost management, particularly in a retail environment where every efficiency counts. In contrast, Durrell has announced a major restructuring, including plant shutdowns and layoffs. This move comes after consecutive quarterly losses and is part of the company's efforts to streamline operations and regain profitability. These kinds of adjustments underscore the challenges that some manufacturers face in today's economic climate, where fluctuating costs and shifting demand require constant recalibration. With all these moving pieces, it's clear that 2025 is off to a dynamic start for the furniture industry. Trade policies, economic conditions, and consumer behavior are all playing a role in shaping what's ahead. Staying informed and agile will be key for businesses looking to navigate these changes successfully. That wraps up today's episode of Furniture Industry News. If you found this update helpful, be sure to subscribe to stay up to date with the latest industry insights.